I do think if Credit Suisse did go into default, I think that would be a big event, right? I mean, we remember Lehman. I don't think we could ever forget Lehman for those of us that traded through that period. And it was a dramatic and traumatic event for the overall investing public as we saw markets collapse. What I'm fascinated by today is that we're actually seeing Credit Suisse up on the day, even in spite of all this kind of chatter over the weekend.
Yeah.
Now, I know the heads of the company came out and defended it, but I do think like all right, so check this out. The combination of this plus, and I know we'll talk about the economic data that we got today, but think about how the Fed may be forced to pivot. And
Exactly.
could Credit Suisse be part of the reason that they're going to be forced to pivot?
It's no news that one of the world's largest banks, Credit Suisse of Swiss Global Investment Bank, may be on the brink of bankruptcy. Over the weekend, there were a lot of speculations as, amidst other issues, investors noted how low its stock prices have plummeted in the bear market. Stock prices of the multinational financial services bank have fallen by over 50% from 9.55 to 3.94 Swiss franc year to date. The bank's market capitalization was $22.3 billion in 2021, but it has now fallen by over 50% to $10.4 billion. Investors also noted a spike in the bank's credit default swaps, CDS, costs, which are currently at the highest level since 2008. A CDS is a financial contract whereby an investor tries to eliminate possible loss arising from default. A bond issuer or firm, in this case, Credit Suisse, insures the buyer's potential losses as part of the agreement. Since this indicator is shooting skywards, investors are concerned that the 166-year-old bank is indeed about to go belly up. Last Friday, Ulrich Körner, the chief executive officer of Credit Suisse, issued a memo which failed to alleviate concerns about the situation. In the memo addressed to employees of the bank, the CEO wrote, "I know it's not easy to remain focused amid the many stories you read in the media given the many factually inaccurate statements being made. That said, I trust that you are not confusing our day-to-day stock price performance with the strong capital base and liquidity position of the bank." He also stated that the bank had mapped out its transformation plans, which would not be made public until October 27. There are also some rumors that Germany's Deutsche Bank may be facing a similar fate. Between them, both banks have almost $3 trillion in assets under management. In September 2008, Lehman Brothers had $600 billion in assets before the nasty crash that became the climax of the subprime mortgage crisis. As a result, it is expected that speculations of such magnitude, not to mention the actual event, will bring a lot more uncertainty to the already burdened markets. In a recent interview, popular technical analyst and trader Gareth Soloway discusses the bankruptcy news and what it could mean for asset prices and the overall global economy. Most importantly, he discusses his outlook for Bitcoin and Ether as we are faced with yet another weakness of the traditional finance industry. Please watch, like, and share this video. Also, ensure you drop your comments and observations in the comments section below, subscribe to the channel, and turn on post notifications for more videos like this. Thanks and enjoy the video.
Now I'm not looking into it too much, but I do think you have to pay attention to everything right now. I mean, you look at what's gone on with the Federal Reserve, how they've raised interest rates from basically 25 basis points or 0.25% to where we currently are in such a short amount of time. And to
Right.
me, it was always, and I know I came on a few weeks ago with you, we talked about this. It's silly to me to think that the Fed, how could they not think that there's going to be these ripple effects that are going to
Sure.
cause major issues, right? I mean, it's not like you're going like Volcker went from 12 to 18%, 50% hike. Here you're going from 25.25% to 3.25. It's a massive move that's going to rock the system. So again, these type of things, to me, it's going to force them to pivot. It really will. I'm thinking, I think the next Fed meeting is the 2nd and 3rd of November or something like
Yeah.
that. So I think that would be where we would start to see it. And I think the Fed will try to be super careful not to make it too obvious. Like, I think
Mm,
you're looking at a 50 basis point hike instead of a 75, which will show
okay.
that they're on the down slope. But I think, again, what we're seeing is the market's already starting to price this in, which I think is amazing. For instance, 10-year yield is falling today. The stocks market
Yeah.
is rallying. So you're already getting the market to kind of jump on this bandwagon. Now, the question is, if we rally too much, does it then kick up the inflation again because of the wealth
Exactly.
effect? I mean,
Yeah.
it's just like this whack-a-mole type scenario. Yeah, so I do think in terms of sentiment, like, every move down in the market, especially we just recently pierced those June lows before the bounce today on Friday, we pierced them. I do think it takes its toll on sentiment. And there's absolutely funds that are leveraged to the hilt here. So hedge fund
Yeah.
world, it's out there. The leverage is ridiculous because, again, their job is to basically give the market or give investors a bigger return than what they could get in the S&P 500. And a lot of them
Exactly.
have been programmed for the last multiple years that to do that, you got to leverage up because the market always buy the dip, right? Always buy the dip. And so I do think you're going to see more and more things. I heard the Vision Fund, I think they're unwinding like 30% of the people in that fund. A lot of funds are already starting to unwind because they've taken such drastic hits. Yes, I would guess it's going to have to be a little bit more dramatic, but I think that the dominoes are already in place. It's just, does it happen if like Credit Suisse did go under? Is that a domino that would start that chain reaction? And my guess is
Right.
it would. I mean, something of that nature, but I don't think the kind of the threats right now. And I really do think that the Fed is probably paying very close attention. We know that the central bank in the Bank of England last week was starting to get involved and stuff like that. So these central banks have to be fully aware. I'm sure they're
Yeah.
hearing from big hedge fund managers and big leaders out there about, our currency are doing these crazy moves. This isn't healthy. I mean, look at the bond market, insane. And again, if you're in, where do you hide in this market when it's collapsing? Because you can't go to bonds, you can't go to stocks. Crypto's not really doing much. So it's a tough market out there. And I think you get these bear market rallies, but the train tracks have been laid at this point, and I don't think there's much getting away from it. Even a Fed pivot at this point, I think it's a short-term reprieve, and then we have more pain ahead.
According to Gareth Soloway, despite the central bank's extremely hawkish stance, we may yet get a much-awaited Fed pivot. But even a hold on quantitative tightening and reduced rate hikes will not stop the coming economic meltdown, Soloway adds. Benjamin Dunn, a former hedge fund chief risk officer, also noted that the Federal Reserve's action is breaking the markets. He said, and I quote, "The Fed is breaking things. There's really nothing historical you can point to for what's going on in markets today. We're seeing multiple standard deviation moves in things like the Swedish krona, treasuries, oil, silver, like every other day. These aren't healthy moves." Let's get back to Gareth Soloway's interview as he discusses what all these mean for cryptocurrencies.
I would mention this, and this is going to the crypto side as well, is that if you saw last week, we saw the stock market really dropping heavily, right, into quarter end. The dollar had at one point been soaring. It started to pull back. But notice how Bitcoin did not have a fall, unlike what it did previously in the previous 6 weeks or month or 2 months, really. And if I could just throw out this concept here, is that I would almost wonder if people in the UK, people in various countries where they're seeing their currency get clobbered by the dollar, potentially had been saying, let me switch some of my assets out of these like pound and into Bitcoin because our currency is dropping so much, especially with the Bank of England interjecting there and so forth. So I thought that was very interesting how you kind of saw this divergence where Bitcoin always was going down with the stock market and down when the dollar would go up. All of a sudden, it didn't do that. And it came right as these currencies were getting clobbered. Yeah, so I'm actually relatively optimistic on Bitcoin right now. I'll pump up my chart here so we can take a look. And what you basically have is this beautiful wedge pattern connecting the lows to the highs here as well. And you can see that we're coming to a head. So what this tells me, when you come to a wedge pattern head, it means you're either going to have a breakout or a breakdown. I think with the dollar potentially topping and the Fed potentially at a pivot point, the short-term pressure is more likely to the upside. So I actually think you'll test this high-end range here. So right over here it would be. So right in this vicinity here, which is around 20,800. And if you can clear that, then I'm in the camp of a very strong October with upside potentially maybe to about 25,000. So number one, with the most addressers or adding the new active addresses, I'm assuming that has something to do with the merge. Probably the excitement around the merge got people really involved. So that's number one. That's always good, right? The more people involved, the better. Doesn't mean price is going to go up near term, but I think longer term, that is a bullish sign. And if we take a look at the chart here, what we can see is that Ethereum is kind of hugging this lower trend line. And you got this same sort of wedge pattern. It's a little bit of a different shape than the Bitcoin one, but nonetheless, you're hugging this line here, and you want to see Ethereum hold this 1260 level right here.
Yeah.
If it can attack the upside and break out, you got an easy upside target of around 2,000 again. And again, for me, it's the 2,000 level is going to be tricky because you also have the daily 200 moving average up there. But that would be kind of my near-term best up case scenario before maybe some more downside. So I think number one, October is going to be a really intriguing month. And the way I could see it playing is in the near term, we're getting this relief. We got some weaker economic data. If the jobs number comes back out a little bit lighter as well, maybe you get a continuation into next week. But then I am concerned about earnings, right? I mean, we've heard from FedEx recently. We've heard from Nike recently. I mean, there are so many nasty warnings going on that I am concerned about earnings season coming in. Yes, stocks have taken a hit, so I think the expectations are lower at this point, but I do think for the most part, they're not low enough just yet. And I think, again, the Fed hopefully is listening to what these CEOs and these conference calls are saying, because I do think it also is a big player into whether or not they pivot.
What do you think of the Credit Suisse report and Gareth Soloway's interview? With a major bank possibly on the edge of financial ruin, do you think the Fed can stick to its hawkish stance? Let us know what you think in the comments section below. Also, ensure you subscribe and turn on the notification bell to stay up to date on market trends. Thanks for watching.